Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, yet another roller coaster ride coming for the markets, right? SGX Nifty indicates somewhat a small bounce coming for the markets. Trades higher with slender gains at this point of time. US stocks pared losses late on Wednesday, but yet Dow and S&P 500 still closed lower. Now there are concerns over Credit Suisse, which have revived fears of banking crisis yet again. Now we're not talking about SVB crisis anymore. It's Credit Suisse which is going to dominate the discussions out there. Fears have eclipsed bets on a smaller US rate hike this month. And Asian Pacific markets, they've tumbled ahead of the ECB, the European Central Bank meeting later in the day. So what's the update out there? Credit Suisse to borrow up to $54 billion from Swiss National Bank. And Swiss National Bank has said that it might just support the liquidity if necessary. This averts an immediate crisis, but the larger fears remain. FIIs, they've been seller for fourth consecutive session now. It's sold in shares worth around 1,271 odd crore, and DIIs, however, have been buying. They've bought shares worth around 1,823 odd crore. These were the top headlines for you, but let us get going and discuss some stocks and strategies today with Chandan Taparia, who is the head technical and derivatives research at Motilal Oswal. Good morning, Chandan.
Good morning. Thanks for having me.
Pleasure. Chandan, Nifty closed below that crucial 17,000 mark. The index has remained below 200-day SMA as well as 200-day EMA for the fourth straight session. What's the strategy and the immediate levels coming in for this one, and what your RSI can the traders be looking at?
So the Nifty has been forming lower lows from last 6 trading session, and Nifty continues losing a stick for 5th consecutive trading session. Earlier, the index was holding well to two key levels, 17,350 and 17,250, but recently it has broken and now exactly taking hurdle near to the same. We have noticed in last 2 days that market was bouncing, but was not surpassing beyond 17,250 and was tumbling down. So we believe that 17,171, 17,250 could act as an immediate barrier to take the market down to our 16,800 to 16,666 level. Now talking about India VIX, that is holding near to 16 trading, quoting at highest level of last 28 days. We have seen some spurt in the CBOE VIX at the US, and the Dow is trading well below 32,500. So all these are the reason that global market as well as the Indian market are finding pressure. And we believe that till Nifty holds below 17,171, 17,250, weakness could continue in the market and bounce could be sold as of now.
Sure, and what's the strategy you're looking also for Bank Nifty, because it has been making lower lows for fourth consecutive session? What's your strategy and the RSI levels for Bank Nifty?
Yeah, Nikki, so like Bank Nifty is also falling down. The good part was that it was respecting to budget day low of 39,400, and because of that, it was just consolidating at higher band earlier. But now it has broken and decisively holding below the same. So we believe that 39,400 now it could act as a hurdle to take the Bank Nifty towards 38,888 to 38,500. RSI is near to 30-35 level. Probably when it goes near to 25-30, it may turn into the oversold. But its structure and the sentiment of the index is weak. So oversold market may remain oversold for a long time. Even FI's long short ratio is near to 12-13%. PCR is below 0.65 level. So all the data setup are hinting on the negative side and the oversold. But till the immediate resistance is not surpassed, we have to be on the sideline, or we have to continue to be with sell on bounce. So to repeat, 17,171, 17,250 in the Nifty and 39,400, 39,500 for Bank Nifty are immediate level. Till these levels are not surpassed, market is likely to have the selling pressure on bounce back move.
All right, so sell on bounce is a strategy coming in till the time that immediate resistance levels haven't been surpassed. But Chandan, what are the strategies that now, traders or investors can be looking at with the fresh weekly series? With the global volatility playing out, what do you think can be the approach, and also 3 trading strategies that can be profitable bets?
So first, if I look at the weekly series, in the series week on week basis, we are down by 3.5% in Bank Nifty. Nifty is down by around 2.5%. So we are trading lower than the volume weightage average. Even the volume weightage average for the Nifty goes to 17,171, and we are 200 points lower from the same. So call writers are likely to have upper hand. Similarly, for Bank Nifty, the volume weightage average goes to 39,700. So that could act as a hurdle, and call writers are likely to have the upper grip. So negative to range bound bias could continue, initiate bear put spread with the view that bounce could be sold and structure of the index is negative. Now, when you talk about the stock specific activities, I'll talk about 2 buy and 1 sell. Even the market setup is more onto the negative side, but given the scenario and the risk reward ratio and stock specific activity, I'll talk about two ideas on the buy side. First is the Petronet LNG holding well even after the market decline. So one can buy with support of 131 for target of 250 kind of level. L&T from capital goods is holding well. So one can look for buying near support of 2120 for target of 2300. So Petronet and L&T are two buy side idea. Now, when you talk about the sell side, most of the banking stocks are in pressure. Selective consumption name are also finding some pressure. So here I'll sell on IndusInd Bank. We have seen bull trap here. Stock surged and then fell down sharply. Shorts are being built. So with hurdle of 1070, stock can drip down towards 1000 level. So Petronet, L&T on the buy side, IndusInd Bank on the sell side, and Nifty and Bank Nifty are likely to continue with sell on bounce and negative bias as of now.
All right, Chandan, let's just quickly address the top movers of the day. Please stay with us while we address this and let us know if any of the stocks look attractive from the charts point of view. And bunch of stocks that we'll be addressing this morning, of course, we'll be talking financials. They continue to hog the limelight. So in Sona BLW procession, now that's one counter also that has remained in limelight for the entire week. And Atmanirbhar Bharat initiative related stocks. These are also expected to be ones in focus. Ramakrishna Forgings and Titagarh Wagons. These are the ones that are expected to be in, we're going to be talking about it first. Consortium has been declared the lowest bidder by the Ministry of Railways, bidder for the manufacturing and supplying of forged wheels. This is under the Atmanirbhar Bharat initiative. The consortium has been set up for manufacturing, setting up a manufacturing facility in India for forged wheel production to supply approximately 1.6 million wheels of different rolling stocks of Indian Railway. Now, this is for the period of around 20-odd years. So do keep an eye out on this one. Morgan Stanley has come up with a bunch of financial reports. It has done an Indian financial trip, and the takeaways for this includes the like of SBI and Axis Bank. For SBI, it remains overweight. The target price of around 750 says that the banking sector is expected to remain resilient despite the recent local, global and macro concerns. Loan growth trends to remain healthy and margins will actually improve over next 2 quarters. Doesn't expect to raise capital in the near term. So that's clearly some amount of worries which have been taken care of and the outlook which has been projected. On Axis Bank, it says that it's overweight again. The target price is around 1,200 share. It says that they expect the deposit growth to accelerate next year, which is going to be driven by improving real rates as well as greater traction on its strategy. Asset quality also has been doing well. The company has been performing well on the asset quality part, with net slippages and credit costs now being at benign levels. Sona BLW procession, now there's a lot of activity. Blackstone exit out there. There was a Jeffrey report out there. Now there's more to that. GIC Private has acquired a 5.13% stake in the auto ancillary company. They've been acting on behalf of Government of Singapore and the Monetary Authority of Singapore. Now, stake acquisition, of course, has happened through open market transaction on March 13. With this, their shareholdings will rise to 6.6% from 1.47% earlier. Now, do remember, Jeffries yesterday had come up with the initiation report saying a buy on this, given the kind of strategies, the valuation, which at this point of time seem to be rich, but still are expected to sustain for that matter. If you also talk about the bunch of other stocks, Patanjali Foods, do keep an eye out on this one. BSE and NSE has frozen promoter shares in Patanjali Foods for not complying with the regulator's minimum public shareholding norms. Now, Patanjali Ayurveda is the single largest promoter shareholder with almost 39% stake in the company. Shriram Finance looking to sell 15% stake in housing finance arm for 1,000 crore. That's a mint exclusive that we have this morning that we'll be keeping an eye out on. But apart from that, we're going to be waiting on the sidelines just to see if Nifty can reclaim that 17,000 odd crucial level. The market sentiment has been rather weak, but we need to see if today is the day. Probably the indicators are expected, they're winging out negatively, but remains to be seen if Nifty can per se scale or hold that 17,000 mark. Nifty 50 out there, 16,973. Well, a flattish start coming in for the markets with somewhat negative bias. 17,000 mark still remains to be away from what we were looking at. And if you talk about the bank Nifty index, that also something is that we need to keep an eye out on, especially because it's weekly expiry out there. Nifty bank Nifty index, 0.3 of loss coming in on that one. So clearly the negative momentum started building in right from the start of the trade. Unlike the trend we've seen in the previous two sessions where the opening at least was positive. So the selling pressure seems to be there right from the start of the trade. Also, let's look at the other sectoral indices for that matter. How are they participating into this one? Are they really giving out signs of more weakness coming in for the market? Broader index, 0.3% of a loss out that one. And also if you talk about the small cap index, we're looking at losses to an amount of 0.3%. In terms of the sectoral indices that we're tracking this morning, Nifty Metal Index, that's down and out by more than 1.5%, close to 2% if I may so say. Auto, flattish but with negative bias. Also talk about the other sectoral indices that we're looking at. Pharma Index has been holding up for you. Defensives clearly, Pharma Index is the one which has been holding up in the last two sessions if I may so recall. It's up with gains of 0.5 odd percent, so do keep an eye out on this one as well. And also, if you're looking at other sectoral indices, just to assess how the market sentiment is, more or less it is negative. IT is down and out with losses of around 0.5%. So clearly the weakness is taken over. We are in sync with the global markets probably. Realty, there's a flattish bias, the flattish trend with positive bias in coming in there. And in terms of advances and declines, 27 advances versus 23 declines. So evenly spread at this point of time. Remains to be seen how this gets updated. At this point of time, advances actually, the market rate is favoring the advances, 32 advances as compared to 18 declines. So the market price right now is favoring the advances, but the sentiment more or less, as you see, the markets have opened on a negative note. But if you're looking at the top gainers and top losers out there, BPCL, Titan, Power Grid, these are the top gainers that we have on our list. Asian Paints, Bajaj Auto, DV's Lab, these are some of the top gainers. Of course, the pharma has been participating well into the rally. Tata Consumer Products, Britannia and Adani Ports, they have also made it to the top gaining list. If we look at the top losers, metal, of course, like we indicated in the sectoral index too. Hindalco, Tata Steel, IndusInd Bank, GSW Steel, ONGC and Infosys. So it's a bunch of metal names coming in on that one, and financials. Bharti Airtel too is down and out in trade today. So these were some of the stocks that we are looking at this morning. But if you could also pull up something like an RIL and Patanjali Foods, just to assess how the sentiment is overall or the market has behaved with the underlying development. Reliance there for you, well, it's down and out, 0.5% of losses coming in on that one. And if you also talk about Patanjali Foods, because the BSE and NSE, they've frozen the promoter shareholding at this point of time, which means that there could be no pledges, no sale that can be conducted thus far. That is down and out by more than 3%. So Chandan, I'm just going to quickly toss it back to you. A, on RIL. B, also on metal stocks, because they have been probably participating a lot more in the sell-off right now. Maybe a strong word to use, but yet we are looking at losses coming in for the markets, and the markets, Nifty still seems to be away from that 17,000 mark. What do you make out of it right now?
So first, if you look at the Nifty as a whole, the bounces are being sold. However, some bounce could be there from lower levels because of buying in heavyweights, but restricted upside will be there as market started to form lower lows from last 6-7 days. So I'll utilize any bounce towards 17,000, 17,070 to now initiate the short position. Earlier we were talking about 17,171, but now the level is drifting lower. When you talk about the Nifty Metal, the Nifty Metal Index is down by around 2% today. It open gap down. However, yesterday we have seen some recovery in selective metal name, but today again some sort of momentum is missing. So if I look at the counter, NMDC may be one counter where more selling may not happen. It may find support near to 112, 113. But if you look at the other name, JSW Steel, then some sort of weakness could be there. JSW has major support near to 665. Below 665, it can open the downside to 650. So in this market, if you have to hide and find some strength, then that will be in oil marketing and crude beneficiary related companies going forward.
All right, so something like an Hindalco and Jindal Steel also for that matter. How are you looking at these charts, and also your word coming in on Patanjali Foods for that matter also, because there has been a BSE and NSE have frozen promoter shareholding on account of non-compliance to the regulatory norms out there.
Yeah, we have seen breakdown in Hindalco. Even today it opened down and drifting lower, so weakness could continue. 400 call writing is also visible, so 400 is the hurdle. Stock can drip down to 360 kind of level. You talked about one known FNO counter, that is Patanjali. However, the stock has been consolidating in a range. So 885 is the major support. I think near to that level, some sort of buying interest could emerge again. So some sort of consolidative kind of setup is there in Patanjali. You talked about one counter, that is RK Forgings in your earlier discussion. So here, if you see a small follow-up, stock can deliver 15-20% movement even in this market scenario. So here one need to keep in mind, apart from whatever the stock you are talking about.
All right, and also something like a Shriram Finance, there was a news that they're going to be selling in 15% stake in the housing finance arm for around 1,000 odd crore. And in trade today, we're seeing already some momentum building in with gains of around more than 1%. How do you look at this chart and the immediate RSI for this one as well?
So like if you look at the Shriram Finance, RSI is hovering near to 48. So structure is not much weak comparatively, but more of the range bound. The good part is previous time it made low near to 1200, and from last 2 days we are expecting to 1220, 1225 kind of level. So 1220 could act as a support for a bounce towards 1275, 1300 zone in this counter.
All right, Chandan, also your word coming in on Bajaj Auto. We've seen significant amount of traction building in an entire auto pack, right, in the last few days. And of course, yesterday there was news related to Maruti Suzuki where the promoter bought a minuscule amount of stake coming in even for Maruti Suzuki, which was a trend that did not play out in the last 16 years. But something like in Bajaj Auto, which is also up and about in trade with gains of more than 1%. Do you think a further upside to this one as well?
So like Bajaj Auto is one of the counter which got stuck in a range. I don't see major up move as well as the downside move as well, likely to be the low beta. But if market recover, then some recovery could be there. I believe 3700 to 3850 is likely to be the probable trading range. One can utilize or buy near to the dips to play some upside targets.
All right, Chandan, also word coming in on the IT stocks overall. They've been beaten down in blue. If you talk about the Infosys, if you talk about Tech Mahindra, these are some of the losers that we have in our list even in today's trade. Mid-cap IT space looks more attractive or looks more scarier at this point of time given their interconnectedness to the US and the European markets, small finance bank. How do you look at it right now?
So like as of now, the structure is not much positive in the IT due to the global market weakness and due to the decline in the Nasdaq. Most of the IT stocks are falling down. We have seen some recovery in Tech Mahindra in last 3-4 days due to the change in the management and the company related news. But again, this stock has failed to hold at higher levels. So now I believe after the recent uptick, stock has come to the major support near to 1100. So buy and decline can be applied in this counter with support of 1075 to again play the swing towards 1150. Now one more counter from non-FNO segment is KPIT. So this stock is comparatively doing well, and on last trading session we have seen good recovery in the stock. So here one can focus if someone is looking for mid-cap non-FNO name with lesser volatility. So 800 is the support to play the swing towards 850 kind of level.
All right, Chandan, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, that's part of the time where we address the fundamental side of the story. And of course, there is a lot to talk about when it comes to the Credit Suisse liquidity crisis after the SVB fallout that we've seen. And to join us to take the discussion forward is Rakesh Arora, who is the founder of GoIndiaStocks.com. Good morning, Rakesh. How are you doing?
Good morning, Nikki. I'm doing very well.
All right. So I'm going to start off by asking you about what do you make out of the overall Credit Suisse liquidity concern? And do you think there is more concern coming in from the balance sheet, bigger balance sheet, more interconnectedness as compared to SVB, or you think markets can kind of weather this out as well?
So, Nikki, we're not very sure how far this contingent would go, given that, interest rate hikes have been very sharp, and, the quantum of increase is also, quite large as compared to historically what we've seen. So it remains to be seen, what would be the contingent impact. but the world has already seen one such crisis in 2008. So I'm pretty sure that central banks now have some experience dealing with these kind of situations, and they are moving in very fast. So hopefully, things will be contained, and we won't really see a repeat of 2008.
Sure. Are you drawing any parallels when it comes to the 2008 crisis that happened in terms of the FIIs, in terms of the economic situation? Do you think any of that is actually playing out now? First we saw SVB, now we're seeing more concerns emerging out of Credit Suisse. What do you make out of it even when it comes to the FII trend and the overall macro situations?
So I think that central banks and governments would try to support and not allow these banks to fail, like what happened for Lehman, and so that would contain the spread of this disease that we are seeing. Number two, if you look at the bond yields, they have crashed in the last 3 to 4 days. So no one is expecting interest rate hikes to continue from here on, and probably central banks might cut if the situation becomes worse. So, there's already indication from the bond market that, there is expectation on the policy front from central bank. So finally, coming to, FI inflows and impact on the Indian market, I think, FI inflows would remain muted for some time, meaning it's a risk-off situation right now. And emerging markets are seen as a risk-on trade. So I don't think money is going to flow into India anytime soon. So we are into a kind of a consolidation zone. I think Nifty should consolidate between 16,800 to 18,000. So that's around a kind of 1,000 to 1,200 range where it should remain for some time till there's clarity on global macro situation.
Rakesh, more skeleton in the closet out there. We've seen thus far the impact coming in on the banking and the IT space. How do you look at these two individual sectors? And what is the sense that you're driving out of this entire crisis situation that is coming in? You think there are more sectors which until now have really not been on the forefront with all of this, but probably will be in limelight once the crisis situation is laid out on the table out there?
So there are two impacts on the IT sector. One is that some of the companies had deposit with SVB Bank. That the US government is assured that depositors' money is safe. So I think that, worry is out of the way. The bigger worry is that, BFSI is a big component of demand driver for IT companies. And if globally banks are under, duress, demand situation for IT companies would remain, little bit soft. And that would mean that, while the stocks have corrected, but they're still not very cheap, historically. They're still like, one standard deviation above. So probably there could be some more correction in the IT stocks given the weak demand outlook, and not really to do anything with, some of the guys having deposited in SVB or other banks.
Sure, Rakesh, our association goes long back to the time when I was closely looking at the metal counters per se. And today is the time when we're seeing a lot of volatility probably playing out in the entire metal sector, right? What do you make out of it? We've seen too much of optimism coming out of the China reopening, but are the trends really encouraging for the sector right now? And within the space, would you still hold on to non-ferrous space for that matter?
Okay, so, Nikki, as you know, that China is the main driver for commodities, and reopening of China is a big positive. Meaning that is the momentum which has carried stocks slightly higher in 2023 as compared to second half of 2022. However, China itself was trying to, support the economy even during the lockdown, and they were spending huge amount of money on infrastructure. So even after reopening, the uptick in spending on infrastructure is hardly anything. So that's why the demand is not really coming through. The second big driver beyond infrastructure is housing, where again, the support is not really coming in because the real demand for housing units in China is around 0.6 to 0.7 billion units a year, whereas they are still building like 1.2 billion units. So there's a huge oversupply. And if you note that Chinese government has fixed GDP targets of 5%, which is below what people were expecting, despite the reopening. So clearly, Chinese government is no hurry to really push or pump prime the economy. So things are going to be a little bit of drag. So, metal sectors look slightly better as compared to second half of 22, and there's a mean reversion happening in margins, but there's no big rally or, any kind of, up move that we're expecting. I think metal stocks will remain range bound along with and trade along with the Indian markets. Coming to ferrous, non-ferrous, meaning obviously longer term non-ferrous has a better, scope, given that, renewable capex is going to need copper, aluminum, etc. in a much bigger way as compared to, say, steel. So that way, I think from a medium-term perspective, non-ferrous looks better placed.
All right, Rakesh, last question that I'd squeeze in will be on the cement sector per se, because we've seen news reports suggesting that Adani might just sell out some of 4 to 5% stake coming in on the cement business overall. What do you make out of it? Any slow expansion or sale plans coming by Adani will benefit the cement sector overall, the space?
Yeah, I mean, a slightly subdued Adani is better for the sector, given that they will not be so aggressive in their capex plan. Though Ambuja and ACC are well funded and they have, huge cash balances. So they'll continue to grow at around, 8 to 10%, which is the industry growth. They will not really push the pedal on going very aggressively, which they were earlier planning, probably now. So I think it's good signs for the sector, which is seeing, cost pressures a bit. Coal prices have come off. Now crude is also falling. And, cement prices normally tend to stick. So cement prices have already gone up because of the cost pressures. Now you will see, continuous margin expansion for cement companies. So Q3 should be like 250, 300 rupees per ton better than Q4 would be better than Q3 by 250 to 300 rupees per ton on the margin. And I think Q1 you will see further margin improvement come through. So, signs are good for cement sector. There's, nothing to worry, and Indian government is doing so much on infrastructure. So demand should also remain pretty stable.
All right, Rakesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you, Nikki.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.